It used to be that the United States accounted for about 40% of global production in GDP. Now the United States accounts for less than 20%.
Hi, everyone. Welcome back to Twin Shores Financial Biweekly Market Updates, where we share what we're seeing in the traditional and digital markets. I'm Alex Kaminer, the host, with Tim Nihill, our founder and CEO, and Alex Krieger, our digital markets analyst. We will be talking about today's big topics, which are banks currently safe to put your money back into? We're also going to be discussing the Senate hearing on bank failures, and will Bitcoin be hitting $1 million? We hope you enjoy the content, and if you do, please like, share, subscribe, and comment down below any questions that you might have. Tim, off to you.
Yeah, fantastic. Thanks, Alex. Well, hello, everyone out there. Thank you very much for sharing your time with us, and we hope this brings you some, good content you can use in your day-to-day. Couple of things from the traditional financial side of things. So last time we had our update, we talked about the collapse of Silicon Valley Bank, and then we had the issues with Signature Bank, and then obviously First Republic. Credit Suisse officially collapsed, and they got to go and do a shotgun wedding with UBS out in Vegas over the weekend. So then hopefully they had a good time. So first and foremost, a lot of questions people ask, and are banks safe? We've heard a lot of rhetoric in the past couple weeks. Oh, the system's fine. Nothing to worry about, nothing to see here. And I kind of feel like it's Kevin Bacon's character at the end of Animal House, where there's just a massive parade of people on the street, and he's saying, all is well, keep calm. I think we've seen the cracks of the system and the U.S. financial system. We've only seen phase one of what we're going to feel in terms of the impact of the Federal Reserve rate hikes. Remember, these hikes take a year to really show the impact and show the effects that they're going to have on different industries and sectors and segments. So we literally just hit 12 months on the first rate hike. So now we're going to have at least another 6 to 9 months on the subsequent rate hikes that we've had. If you're asking me, are banks safe and if I'm going to be concerned with things, I'm saying yes, because I think the next 6 to 9 months are going to be very, very painful, and they're going to be different, and they're going to highlight the fact that this economy has not been a free market enterprise since before 2008. And everyone's going to learn about how inflated housing is, how inflated their 401ks are, and just how inflated the financial economy has been in comparison to real assets. So more pain points to come. People are talking about rate hikes. Fed probably will rate hike at least at least 1-2 times before they reverse course. Now we're just kind of playing the waiting game. And, it's kind of like one of those things where it's like you're watching the Titanic go under. You better have your lifeboat in place. Not that we're fear-mongering, but when you do the analysis, it's all leading to the same spot. And this country has a rich history of whenever anything hits the fan, the United States goes to war to solve it. And we're already seeing that that's lining up with China, and that's on the docket for the year 2025. So wars mean inflation, but that also means investment opportunity in things like energy, oil, natural gas. Their utilization is going to go up in the next 10 to 15 years, as much as there will eventually be a transition to something else. So we see some bright spots there. We still like our commodities and gold, silver, and Bitcoin as the insurance policy for all this. And there are going to be some opportunities that I think are going to start to appear in the next couple months. So, for anyone out there, it's like we say, do your homework and invest wisely. But if you're playing that whole stock market game, understand that you're in the casino, and there are going to be there are going to be some big red spots, and there are going to be other things that are going to break because they're already broken. It's just been hidden. And I think Deutsche Bank's another example. Someone like Schwab is on the docket too, because they're having a big problem with their credit default swap book, which I hear is about $7 trillion.
Yeah, I heard they were removing the tickers on, I think it was MSNBC or online on some of the major news organizations. There's 5 other banks that are hiding or removing the credit default swaps, the information online on their website.
In the public forum, in the main news media forums, they've been pulling off all the information about how leveraged and how highly leveraged the banking system is. And then they've also been hiding their CDS portfolios. And credit default swaps are really not much different than what got the industry in trouble at '08. It's just kind of a new fancy name for the same thing. So as usual, it's business as usual. Every market cycle that we have, right? Because these are now just a norm. 2000 was the collapse of the technology industry. 2008 was collapse of investment banks. And now we're going to have our regular traditional banks are now what's collapsing. Not saying that money's not safe. If you have more, I would say if you have more money that's covered by FDIC in your bank, you probably should move it elsewhere. I know with investment firms, we have SIPC coverage, which tend to cover at least $500,000 by default. Platforms and investment firms will carry excess coverage, which can insure people their securities in cash. Let's say anywhere, some of them up to $149.5 million in securities and $2 million in cash. So there are different protections out there that people should be aware of. And then on top of that, like we said, it's just, you got to do your homework. You can't trust what is being broadcast on the media channels because a lot of it's a distraction from the reality of what the situation really is.
Let's talk a little bit about the Senate hearing that's taking place today. There are some really important key takeaways that we wanted to discuss, and then I want to get your guys' opinion on the fact. I think that it's tough there. I don't want to get too political with this, but I think both sides almost don't really know what to do because the Fed is continuing to raise rates and it's not going to stop until they stop doing rate hikes.
I think so. I think we just learned how that things are broken and are breaking. I think the fact that the Fed raised rates again, it shows that they're meeting their mandate. It's what they're trying to do. They have their mandate and they're doing everything they can according to they don't have any consideration for anything else.
They're doing their job. They're doing their job. Yeah.
And the problem is, and this is what people do not understand, the number one factor for this entire thing is the United States government. Our government is a problem. Our government spending is a massive problem. It doesn't matter what political side of the aisle you're on. They have done nothing in 40 years to fix this issue. And they just continue to write checks that, quite frankly, the people of the United States can't cash anymore. And the tsunami of this is going to be all the foreign countries are going to start sending U.S. debt back to the United States. And that is a massive, massive risk for all of us here.
Because then the U.S. citizens are holding the bag. We use dollars every day, and we're going to be the ones stuck holding the currency they're dumping all their treasuries on us.
Right. It's a huge storm that is coming. It's already starting to hit, and it's the same thing, right? Something collapses, like Lehman Brothers collapse, and then they go on TV, hey, we're having a hearing, and then nothing gets done, and it's business as usual. It's just now that this country, the people, the government is so in debt, and now that credit is tighty because the entire system is running on credit, right? People buy stuff on credit. People buy homes on credit. People use and buy cars on credit. Everything here, it's a finance system. And the problem is credit is drying up. So there's a massive liquidity crisis that's happened and happening. And at the same time, we're going to raise rates and probably continue to inject capital into the system. And it's going to be very interesting to see how it plays out.
I mean, even if looking at it today, I don't think anybody expected the stock market to do poorly just based on a hearing on what needs to change. And if you look at the markets today, they are declining. They are just decreasing, which is almost scary if the talk of regulations is causing that to happen.
Well, and remember, we had regulations, right? And look what happened. So here's the thing, right? You can't regulate This is the biggest misunderstanding people have. I don't care what the government does. They can't regulate BlackRock. They can't regulate these big banks. They can't regulate Vanguard. They can't regulate Fidelity. These companies are so big and they have so much power that they're above all nation state regulation, right? And that's really the crux of it. And it's not saying that they're out there trying to do bad things, but again, it's like we talk about this. We have an archaic system and we have an archaic government and we have archaic oversight. So you could talk all the regulations you want. It just is never going to be where it needs to be until we get out of this 1930s security and banking industry mentality. You know, and that's the crux of it. It's just we are transforming into a new system, and the United States dollar system is dead. It's going away. We all know it. And if you look at CNN over the weekend and Fox News and Fox Business, they're talking about it now. It's de-dollarization, right? So the U.S. Dollar system and being the main reserve currency system of the world is over, and it's just a transition to something new. And people, you have to prepare for that.
Yeah, I mean, it's definitely going to be a very interesting transition, to say the least. Stepping away from banking specifically, another thing that's also in the news the past couple of weeks is that we're expecting the likelihood of the debt ceiling increasing is becoming more and more unlikely because both the speaker and the president both are not able to negotiate in a coherent manner. And we've already talked about the fallout of what that would look like, but just to reiterate, it's going to affect everyone. Tim, Alex, any opinions on that matter?
Yep, 90 days. Be prepared. De-dollarization is going to be happening in the next 90 days. And it's kind of convenient. 90 days from now is beginning of June when FedNow, their payment systems goes live too. So, coincidence? I don't know. This must be.
Yeah, and I think for people out there, the FedNow program is basically, it's a whole new financial transaction system, which opens up the possibility of what's known as central bank digital currencies, which means that there's a possibility that your money will be issued and controlled digitally by a government.
Sure.
So, you know, I always say to people, it'll never be 100%. Ultimately, individuals always win over governments. That's just been the case for the history of humanity. And then I think people are really going to start to understand the importance of things like Bitcoin and decentralized finance and all that stuff. But this is probably something that it's going to be played out by everybody across the entire world. This is not just an individual thing here. In the United States, yeah, you're right, man. It's 90 days.
90 days. June.
90 days.
Maybe sooner. You never know.
Yeah.
It's just going to be 1 week. You're going to just start noticing. Well, week after week. New banks, new problems coming up until they can figure out their FedNow system to go live and attract as many people as possible.
Yeah. Right. And I think it's fundamentally about control.
Correct. That's why be your own bank, buy gold, silver, and Bitcoin.
Well, and the other thing too, I think, it's as an individual, you really have to understand what's going on, because historically, usually get every 100 years, we get a whole reset of the global monetary system, right? And we're in one. So if you play your cards right, you could definitely build net worth and profit off of it. But if you just kind of sit there and do what you're doing, like BlackRock has been coming out with, they just had a head of fixed income, Rick Rieder, on, and they're trying to reiterate, like, hey, man, the game has changed. The whole 60-40 diversification, asset allocation, that's dead. You have to be different now. And there's no time. There's no more time. You can't wait on this anymore because it's literally hitting us now.
Alex, you mentioned Bitcoin, so let's transition into the Bitcoin news that we're seeing in the past couple weeks. Most surprising thing that I think anyone's ever heard is the previous CFO made a pretty big statement this past week. Well, let's talk about that.
Yeah, he made a comment with A16 partner. Actually, we have it wrong. James Medlock is the Coinbase CTO, and he was in a discussion with A16Z partner, which is a hedge fund, Balali Servanson. Sorry for butchering it. And they were placing a bet that Bitcoin will go to 1 million in the next 90 days, which was what we were talking about, de-dollarization. It's just going to be hyperinflation of the US dollar that pushes Bitcoin to 1 million, in my opinion, which is still a good thing. It's just, will it be 1 million in the new currency or whatever, the CBDC or the BRICS back gold currency? That's what it really. It's just a interesting bet. There's a lot of people that are chipping in and chirping in about it and seeing what way it is.
What do you think about it?
I personally, I could see it. I could see it happening, especially with the turmoil that's in the banking sector and everything else that's going on in the financial world.
Is there any other news that's coming out of cryptocurrency in the past couple of weeks?
Not really. We're just pretty much more of it's going to be regulation stuff that's happening behind closed doors. And then just word going sideways, really. You see this pump. I think, what was it, 2 weeks ago, we called this run up to 28, and we're in this little retrace back down. I think it hit 26 for BTC, and 32 is what I said. So let's hope by the end of the month we can get up there.
Yeah, well, besides Bitcoin, is there any other you've seen with the other currencies and some of the altcoins?
If Bitcoin moves, Ether's been moving nicely, cohering with BTC gains. Same with altcoins; they tend to follow BTC. And how do I say this? With the de-dollarization, how do I say this? I see Bitcoin going back to 2018 style, where these altcoins are now being traded against Bitcoin, and Bitcoin is the currency to be traded against. Does that make sense?
Right. So people trade in Bitcoin and not trade in like USDC.
Correct. Versus their assets. ETH to BTC, ETH to Curve, or to whatever altcoin, and so forth.
We just get it out there that de-dollarization is just really, really a weird word.
Yeah, right.
Listen, we're just not. The dollar dominance is over.
Yep. The use as the world reserve currency is over. Be prepared, not to be doom and gloom and fearmonger, but like we keep saying, gold, silver, Bitcoin. I am fascinated with more physical assets, holding on to them. Same with Bitcoin, having it off the exchange on my own phone, not your keys, not your coins. Cannot stress it enough, people. I'm sorry.
I think there's a little history lesson, right? Like if you get into the late 1800s, early 1900s, the two largest global economies in the world were China and India. That changed significantly through the 1900s, and you had World War II. You had, what year did Britain take over India? It was early 1900s, right?
Yeah, 19, like around World War I.
Yeah, so that's, that hits home with some family members who are still upset about that because the British went in and just basically pillaged India and left it for broke. Now, if you look at it, it used to be that the United States accounted for about 40% of global production in GDP. Now the United States accounts for less than 20%. And China's economy has grown massively, and so is India's. And if you look at, as of last week, 18 countries are now trading across their borders using the Indian rupee. The writing's on the wall. Dollar dominance is over. It's an interesting conversation, right, from an investment perspective, because it's like, well, I can run at treasuries and get 4 or 5%. Well, you're going to be paying $50 for a watermelon soon, and your inflation is 10 to 15. So why would you put in something that locks in a 10% loss, right? Like, you have to rethink. You can't, like, there's really no safety. And a friend of mine went on Bloomberg. He works for John Hancock. My buddy Matt Miskin I used to work with a long time ago, and he's on the investment side, and he goes, listen, treasury bills are trading like meme stocks now. So there's volatility and risk in everything, and you really have to understand how to be well positioned and invested now. And doing the old dollar cost average 60-40 model is not the way.
Right.
Nope.
Well, I think that's everything that we had on our agenda for today. So on behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed it and want to keep up to date on the markets, please tune in every other Thursday for all your financial information. Don't forget to like, share, and subscribe. If you have any questions or comments, please don't hesitate to put them down below. Tim, Alex, any last words?
Do it, man. You know you want to.
Not your keys, not your coin.
There it is. Do your homework, invest wisely.
Thank you, everyone.